Well, Chris, thanks so much for joining us today. You've achieved a lot in your career, 26 years in IT, 21 years in corporate before you started at Xero. And what are you doing now?
Look, I left Xero thinking I'm going to move into another CEO gig. In fact, I was having conversations. I had a really interesting company who were going global CEO role, and got to the 11th hour and decided it's not what I wanted to do. It was quite interesting because I had this expectation when I left Xero that was kind of do another one. Mm-hmm. But I think part of the issue was with this company was going offshore, so it meant a lot of travel, and I've got a family. Yes. But also I think Xero gave me an insight into the tech industry. I was really close to the ecosystem and seeing a lot of innovation. And I'd started after 5 months to a contract with a couple of startups, and just got me really fascinated with spreading my efforts across a number of organisations, and that's what I'm doing now. I've got half a dozen startups that I'm advising to and getting involved either as an investor or advisor or both. And I just love the variety. And I think, right now in the tech industry in Australia, it's a really exciting time. And so some of the things I've learned in the corporate world, certainly at Xero, I can bring to the table. And, it's a really fun gig.
Are there any common themes you've seen in the corporate land in terms of the way they approach innovation, and also at Xero, and then in some of the startups you're involved in now?
It's very different in the corporate world versus a startup, of course. And for me, it was a bit of a shock coming in. I mean, I loved it. There was never a time when I thought, oh, what have I done? But, I had a lot of resources at my disposal at Microsoft. I think if I'm hiring staff, I could pick up the phone. I had a recruiter in the office. If I had a legal issue, I, had lawyers on tap at Microsoft. Confronted with a startup with 6 staff, I was very much on my own, so I had to tap into my network. And, the difference with a startup, the fun bit was in the early days, there were no rules. Yeah. You could make things up as you went. Mistakes were made, but that was kind of encouraged. Yes. Very nimble. All of the elements, I'm not telling anyone doesn't know. Startups, it's a great space, very different to corporate. And it was interesting on the journey because when I reflect back on the things that I took from the Microsoft days into Xero as it grew, it was interesting because there was real resistance within the organisation about some of the systems and processes and disciplines that we knew we had to get to, and it was quite interesting. You lose people along the journey because some people don't feel comfortable in that corporate sense. Yes. But effectively, you're going from startup to corporate. Yes. You have to bring in some of those disciplines, the systems, that, and not least of which, we listed on the ASX in November 2012. The market investors expected to be some governance, right? Yes. So things do change. They do become much more systematic, and that was never anything that I felt uncomfortable with, but certainly the organisation changed. So I think it was the combination trying to hang on to that entrepreneurial culture where we were moving quickly and making decisions quickly, but starting to introduce some of the disciplines that you typically see in a big corporate. So there's no one is better than the other. You've got to try and over the journey combine the two, and I think Xero did a good job with that.
In a large organisation, when you're trying to be innovative, what are some of the things you can do to create a culture of risk-taking, reducing the fear of failure?
Look, it is a challenging one because some of the big organisations, the cultures are not easy things to change. I saw that at Microsoft, not so much around innovation, but at the time, if I go back to probably around 2000, 2001, the organisation was really trying to build this notion of a customer-centric organisation, get back to getting a lot closer to the customer. I mean, Microsoft had been through a very difficult phase with the whole, Department of Justice and the potential breaking up of the company around the whole, antitrust trial. So it was really about getting back to more customer-centric culture. But that took a number of years to do. There's a lot of change programs that came into play, new leadership and those sorts of things. Talking about innovation, I think innovation really needs to start at the leadership level. If you think about what we were really hanging on to within Xero as we grew was ensuring at a leadership level that you can, as you're thinking through strategy and as you're starting, you want to continue to get the ideas coming in from the grassroots into the organisation and have the operational framework to be able to then build that into your goals and your strategy going forward. I think it's one thing to talk about innovation, but it actually has to be built into the way you're operating as a business. But look, it's difficult for big organisations, and one of the things they can do is look at partnering with smaller organisations. Look at, you're seeing a lot of the big companies today building innovation labs, which are, typically they're sort of siphoned off from the core of the business to go and look at new ideas and then bring those back in the organisation. Range of approaches, but I don't think it's easy. I don't think it's easy because culture and innovative cultures really, they're easy with startups, because that's you're born with it. To create that in a bigger organisation is a lot harder.
So you spoke then about exits for organisations and corporates buying smaller businesses to innovate, and Google's bought a lot of their main products were born outside Google, bought into Google. A lot of US firms acquire. I don't see that happening as much here in Australia. Yeah. What's your view on Australian companies and their should they be looking at Australian startups or even global startups to improve their innovation capabilities?
I mean, you hit on a good point. I mean, there are efforts. You see, I mean, I think Telstra's probably a good example where they are making investments, funding some startups and actually bringing them into their fold. But it is, you want to see more of that. It was interesting actually. We're in Sydney. I was having a beer last night with my former colleague who's now with a big organisation, and one of the startups I'm involved with, I can't go into detail about it, but the technology they've built, it was quite interesting. I was talking to this leader of this business, and he's scratching his head because he's saying, we've just invested millions in what you've described, and I reckon 80% of what you've just described, which this small little startup in Melbourne of 10, 12 staff has built, probably displaces 80% of what we've built.
Yes.
And it was a really good example where I think, big organisations that are trying to adopt innovative approaches are trying to build it all themselves. And quite often they can go out to market and look at some of these smaller bootstrapped startups that have been nimble and able to build compelling technology. So I think more of that needs to happen. Rather than trying to think, we can build it, why not go and partner and look at what else is happening in the market? And there's a ton of stuff. I mean, if you go back 5-10 years ago and look at the state of the startup community in Australia, it was very small. Yes. And I think, cloud in particular has allowed a lot of these startups to punch above their weight, to create great tech. And there's so much. I mean, the thing I love about my role now is that I'm able to go and actually have a look at a whole lot of stuff going on, and I'm constantly amazed on what I see out there in the market. So there's a ton of innovation happening, and I think, to your point, I think, we've seen it for a number of years in the US where they're acquiring. I don't see enough of it here, and I think more needs to happen.
So in Xero, you grew up from 1 million to 100 million, quite a scalable business. At what point did you move from focusing on top line growth to sort of looking at the operational efficiencies and how to minimise cost? I
think software as a service, particularly with Xero, we were focused on customer acquisition. And I get to talk to a number of startups at events and things, and I always caution at the start by saying Xero was quite rare in the sense that, startups do have an obligation around cost containment and ensuring that they're growing at a sustainable rate. Xero, halfway through 2011, the strategy changed. We were actually headed to break even at the end of that year, and the board meeting in June of that year was we have a window of opportunity to go hard. But my caution to other startups is that Xero raised 450 million. Now that's very unusual for a startup in this part of the world. So I had no shortage of money, but we had guidelines around SaaS business. You look at, can you acquire customers, and what is your ability to to pay back or acquire those within it's basically months to acquire is one of the common SaaS metrics. If you can get that under 12 months, or indeed down to 8 or 9 months, then you can keep spending money because you're within the guideline of a SaaS metric, and it is all about a land grab. It's about acquiring customers very quickly. So we knew we were in the benchmark of best practice SaaS, so we could continue to spend and acquire. But we were always conscious about building a business that was sustainable. Like if I look back at Xero, I remember at one point, Trent Innes, who's now running Xero, we sat down, it was probably about 18 months, 2 years ago, and I said, how do we stop hiring salespeople? Because, you know, the thing that we want to do is actually build something where you can, you know, you're acquiring customers when you're sleeping. You know, that the business is able to build this, you know, this sort of viral, you know, sales model. We needed salespeople because the accounting industry wanted to engage our brand through people. But I was always conscious about, you know, don't keep throwing an extra head at it just because you've got the money. You know, you want to build something that when you look long term, that you build an efficient business. And sure, you want to acquire, but cost does become a consideration. So that's the Xero side of it. I think for a lot of startups, you know, you're still thinking about a scalable business. You know, you're thinking about how can I scale and go global. But I still think it is about acquisition. You can be a loss-making venture for some time, provided you've got the funding.
Yes.
But you know, you create a vastly more valuable business if you can build that scalability into it. But at some point, you do need to demonstrate that you do move into cash flow positive or a profitable business. There's no doubt.
What I'm interested in is your kind of recommendation to the ASX 20 around when does it feel right to start looking at the operational efficiencies rather than just growing the top line?
If you're thinking about, I mean, some of the challenges that you're seeing with the, you know, ASX 20, they are redefining their business models. I mean, they're finding new revenue streams that might be completely different to what they're doing today. So if you've got financial people looking at the bottom line, you're dead. You know, you can't. So, you know, if you're creating new revenue streams, you have to be aggressive about it. I mean, I go back to the Microsoft days. It was interesting. We knew back in 2008-9 with the cloud that was coming that Microsoft was in trouble. You know, the core, you know, products, the Office and all the cash cow products. I mean, it was changing rapidly, and I think Microsoft did actually a really good job of transitioning to cloud. I remember actually we were talking about the other night, there was this catch cry in 2010, it was the year I left, you know, the executive had this catch cry which was, you know, we're all in, which was, it was really a message to the staff to say we're all in the cloud. So in other words, you know, to developers, everything needs to be cloud enabled. And it literally happened over the course of like 3 months. There was this recognition that within Microsoft, if we don't change and actually embrace the cloud, the company's dead. And so you don't focus on bottom line. And a lot of changes occurred. I mean, if you look at Microsoft now, they're really focused on consumption of cloud services as opposed to in the past, it was always, there was $1 attached to everything. Now that might seem a subtle shift, but it's a huge, huge change in the way that you think about how to drive the business. And so that was a good example where you have an organisation that is, you know, forget about cost recovery, forget about making profit. You're actually in there for survival because you've got to find where the market's heading and you've got to change the way you're doing things and totally embrace that change, in that case, the cloud. So coming back to your question, you have to ignore the bottom line. You have to think about where the market's going, how do we create, you know, a compelling revenue stream and really think about innovation. And it's often about survival.
Failure in big organisations is viewed very differently to the way that failure is viewed in high growth startups. Just love to get your thoughts on that.
I mean, let's face it, whether you're in a big corporate or a little startup, no one likes to fail, right? So it's how you deal with it, right? And it was interesting, I think in big corporates there is a tendency for people to be risk averse, right? That, you know, you see it all the time that people don't like to stick their necks out. Simple things, you know, feedback about things they're not comfortable with, or indeed trying something new. And I think organisations are trying to change that culture, but the reality is in bigger corporates there's less of a tendency to do that. The startups equally, you don't want to fail, but you've got more permission. And I think it was interesting at Xero. I mean, I remember making an almighty screw up back in late 2013. It was the first time we had implemented changes to our subscription pricing. And without boring you with all the detail, there was one element that it was my call, I got it wrong. And boy, did I hear it, because when we launched, we got so much feedback on social. And I remember getting on a call with Rod Drury and the CRO at the time, Chief Revenue Officer, and I said, I've screwed this up. And it was really interesting because wearing my corporate hat, I thought, my God, you know, like I'm in big trouble. But the conversation went along the lines of, okay, all right, we've screwed up, what do you want to do? And I said, well, I think we need to change it back. Okay, and it was just, okay, what have we learnt?
Yes.
okay, we've made a mistake, that's fine. So what do we need to do? And we actually reversed the decision and we went out and told the market. Now, some of the cynical people out there said, oh, you did that deliberately so you look really good, you know, because all the feedback was, oh, Xero's amazing, you've actually listened and changed it. And I went out and said, no, I actually really screwed it up and got it wrong. And we listened, and we've changed it back. But I think the lesson there was that, you know, and the great thing was that the team, all my organisation saw me fail. And they saw that I was comfortable, yeah, okay, and I said, look, I got it wrong, but we've changed it. And I think that was a fabulous signal to the rest of the organisation, all the way to the top, was that, yeah, we tolerate fail. And look, we're human, we're going to make mistakes, but it's how we deal with it. And again, I always come back to the fact that you've got to listen to the customers. Like if if I'd been in a big corporate world, I'd go, oh, no, this is the right decision because financially, you know, this is really important, we'll just have to see it through. But in my heart, I knew that we'd screwed it up. I had, and so we had to change it.
Ian Narev recently said, who's the CEO of Commonwealth Bank, said the Commonwealth Bank's got 10 years to make the shift or they're toast. Commonwealth Bank's dead. Do you think Australian companies can make the shift in that time, and how do they do it?
I'm a big believer in the notion that necessity is the mother of invention, and I think, you know, we've seen time and time again that big companies, look, they come and go, but by and large, they will embrace innovation if it's about survival. And look, there's no better example than financial services, right? I mean, you've had, you know, a number of the guys at Atlassian come out and say there's $28 billion worth of profit. That's a huge, you know, I see disruption. And so you're going to see new players come into the market that are going to be able to create new services. And look, I think that's a good thing. You know, I'm not anti-bank, but, you know, there's obviously been a lot of talk recently about the Big Four and the dominance in that marketplace. So disruption, yep, it's about competition. It's bringing new services, new players, new innovation in to shake things up. It's going to make the banks better. It's going to make them more competitive. They're going to have to create compelling services and products to be able to keep their customers. So, you know, I'm optimistic. I don't think it's sort of a doomsday thing where the banks are going to die and, you know, whether CBA is going to be dead in 10 years. I doubt it, but certainly the shake-up is a good thing. It's a good thing for consumers, good thing for customers. It brings choice and, you know, it's innovation. And that's a great thing about tech. You know, it's good for the economy.
If you had one piece of advice to, you know, the leaders of the top companies in Australia right now, what would that be?
Big business can learn a lot from what's happening out in the tech startup world. I mean, you look at any industry, what's the word I'm looking for? Any industry that, if I look out at what's happening in the tech startup world, there's so much stuff going on because the barriers to entry for a startup to innovate in a particular niche and do it exceptionally well, that's changed. It's a lot easier. It's lower cost, and so I think what we're going to see is big business having to embrace what's happening out there in the startup world, whether that be through partnership or whether it be through acquisitions to bring some of those, you know, they might be a tiny tech startup, but it could actually generate $100 million for a big business one day. So I think that collaboration and just the embracing of the tech startup world and big business, they're going to have to do it for survival, you know, because to your point earlier, you look out 5 to 10 years, there's some real pain ahead for some of these big organisations. So reinventing themselves and understanding how they can actually generate new products and revenue streams, it's all going to come from what's happening that's incubating out in the startup world. And I think that's great for the industry.
Do you think there's enough innovation talent in Australia? At Xero, did you need to go outside Australia to get innovation talent?
In the early days, it was hard because we didn't have a brand, and I think, you know, there's a lot of choice now for you know, technology people in technology to actually go and work in, you know, a whole range of different startups and tech companies. So there's quite a lot of competition for talent. Is there enough? Probably not. We didn't necessarily have to go offshore, although we ended up with quite a diverse group that came from all parts of the world. But it's really interesting because I think, you know, it was interesting when I got involved in Xero, and one of my mentors who's involved in the startup world said, you know, it's really interesting after the Xero thing. It was, you know, if we were looking again at you, Chris, you know, coming out of corporate, probably wouldn't, you know, you wouldn't necessarily fit the bill because you're, you know, this corporate soldier. But I actually disagree with that. I think there's some incredibly talented people in corporate that are looking to actually move out of that corporate mould into startups. I'm a good example of that, where I made the transition. You know, and working with some startups today that are thinking, oh, we've got to get people who are sort of in the startup. Well, it's not necessarily. There's some incredibly talented people that are looking for a change. That they're like me. I was kind of over the whole, you know, the corporate. You know, I learned a lot. So I'm not dispelling that, but I was ready for a change and do something small and nimble. And so I think you've got to be sort of open-minded about where you're sourcing that talent from. It's not just the young people that have always been in the startup world. There's some very talented people that want to now move down into the startup community that have incredibly great skills and experience that can help startups grow quicker.
Chris, thank you so much for coming and sharing your insights. We're definitely going to be watching what you do in the next couple of years.
Thanks
so much.
Cheers.